Michael, Yoshikami, as we approach year-end, should people be taking profits and rebalancing their portfolio? Should they be doing that anyway, regardless of where we are in the calendar?
Yeah. I'm constantly harping on how important it is to rebalance portfolios. Now, you got to keep in mind too, Will, that we really have a tax year issue here, right? So if you're taking profit, remember any profit you're booking in non-deferred accounts, you're going to be paying tax. You got to weigh that against taking profit, but I think that's what's actually happening with a lot of these big names that you see are going sideways. People are taking profit, and I think it makes sense to rebalance. Rebalance into assets you still have some optimism in, maybe more dividend-oriented plays, and get out of some of these names that have had really incredible rallies. Rebalancing. I say it over and over again. It's critical for investors for long-term success.
Barb, as you think about 2021, the growth setup is looking good. Jan Hatzius of Goldman Sachs upgraded first quarter growth to 5% from 3%. Big upgrade earlier today, partly on the stimulus that just passed. How do you set up a portfolio for that kind of environment?
Well, if you were starting from scratch, I think you could start with the barbell approach, because I think with, if they're right and if GDP is going to come back so strongly, I think there's a very good chance it will. By comparison, the relative earnings of cyclicals, certain value stocks are going to do better. And you've had so many of the great technology, high price names do well. They're probably pretty fairly valued. Now, they will continue to climb higher because they have great sustainable growth rates and high quality earnings. So you still want to be in them. So if you're constructing from scratch, you want to rotate around, because Michael's right, you have to do some rebalancing, because lots of people have lots of gains, and trim those back and start to get a more balanced portfolio. However, when you're looking at the cyclicals and values, to me, that's in a way a medium-term or long-term trade, 12 to 18 months, because that changes with the economic cycle. Because that's why you still have to be in these growth names.
Michael, how important was the stimulus bill being signed to you? Does it drastically alter which sectors you want exposure to for next year?
For us, it didn't, because we expected that the stimulus bill would be signed. But if it was not, it would be a major problem for the markets. Although you have to recognize that I think the markets are right now betting on just piles of money, regardless of who wins the elections in Georgia, piles of money coming into the market, maybe through an infrastructure bill in the first quarter of next year with the new administration. So stimulus bill is important. We're at right now, almost $4 trillion of stimulus. In 2008, investors think about how much that was controversial. That was only $2.5 trillion. Can you believe I'm saying the word only and $2.5 trillion in the same sentence? We're now over $4 trillion, and I expect when it's all said and done, we're going to go 5 to 6 trillion. So stimulus makes a huge difference. It's money just floating in from the heavens into the markets, and that's what's driving the markets higher.
Shepard Smith here. Thanks for watching CNBC on YouTube.